All right, let's get to business here and learn a little bit too. She has her finger on the pulse of money matters, and we like to pass along that information to you, our valued viewers and friends of the show. Top Richmond money expert J.B. Bryan is here to explain
Oh,
DIY investing, and we welcome her back to Virginia this morning. Hey, JB.
it's so good to be here. And anyone that watches the show and they can't smile and laugh, you made my day too. I,
Good, 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 good.
thank you.
This is such a great
DIY.
topic that you're going to cover, because the reason that you're in our life is because some of us aren't comfortable DIY. So you're not putting yourself out of a job here, are you?
I believe that advisors, a good financial advisor, will exist till the end of time.
Good.
We were Look, there was Adam and there was Eve, and then there were financial advisors.
Okay.
Definitely. And I love that there's so many people that in the middle of a pandemic, like that's why this discussion is so valuable, because in a pandemic bill, these are 2020 numbers,
Yeah.
that millions of new investors entered the stock market.
Wow.
Amazing.
Well, they're
Yes.
sitting at home and they go, well, let's see if I can do this. So let's
Yeah.
see if we can do it. What are the top
Yeah.
reasons investors open new investments during the pandemic, other than just they were bored and said, let's see if I can do it?
Yeah, well, FINRA did this research, and they discovered that, and FINRA are the regulators for financial services, and they have an investor education foundation. And they studied it, and they found that 35% of these new investors were excited about opportunities to invest small amounts of money, where traditionally people think that they have to have a lot of money to start. Well, these new investors are starting with small amounts of money, and then that's over 35% said that. And then we moved to like almost 30% said they wanted to invest for the long term, for their retirement. And and then that was followed by an additional reason for investing during a pandemic was that the dip in the market. These new investors said the dip got them excited about buying stocks on sale.
Well, it makes sense because if you actually had time, which we all did, and you sit down and you think about it, said, all right, so we're in a
Mm,
pandemic. It's not
mhm.
going to last forever. Obviously, there will be. I don't think any of us expected it to last as long as it did. And then about halfway through, none of us thought it would end as fast as it did, or at least we'd make the progress we did. So you think about
That's
it and
right.
say, okay, so this is causing a big dip, but it is going to bounce back. So
Amazing how we came back. We had a
yeah,
record breaking year.
yeah.
That's amazing. That
Well,
is amazing.
so where did they go? Did they go to brokerage firms? Where did they go to invest? I think you started down that path already.
Well, right? Well, they actually started investing not at the traditional investment firms, but they're actually taking advantage of technology. So they're going into online trading platforms, apps that are out there that allow them to start investing with that small amount of money that they're interested in. And these are the majority of these new investors were found to be under 45 years old.
Hmm.
So, but they definitely are using technology, taking advantage of technology, and not doing it the traditional retail investment firm route.
Yeah. All right. So let's go to the next step then. Say, all right,
Mhm.
these folks are doing this. They're getting their feet in the water a little bit, but there is a lifeguard on duty, and they had to turn to JB from time to time. Did they actually go to the professionals?
Oh no. Oh no, no, no. Look, almost almost 40% of the new investors said that they get their advice from, see, this is how I stay in business, because you go and you do this, and then you go, wait a minute. But they actually said they were getting their investment advice from their friends, from people they know at
Oh,
school, and
okay.
from their family that had were doing investments and things like that. Um, uh, Almost 40% of them said that they consulted the actual company's website that they were considering investing in. But a very few of them said that they looked at regulation or regulators as a source of information. So that could, mean they're not getting a lot of background information on the particular investments that they're looking at.
All right, and then finally the pros and the cons. I think we just heard one of the cons is they're
That's right.
learning from their sisters, cousins, uncles,
That's
hairdresser.
right.
Yeah,
And the big attraction, yeah, on doing it yourself is that they don't have to pay the advisor fee.
yeah,
So, but they do not have an advisor. So that's why they save money on the advisor fee. But it also gives them the independence. Hopefully, it's building their confidence. But in much of the information is showing us that do-it-yourself investors too often become disenchanted. They become frightened when the market gives you them some even short-term volatility, and too often they start avoiding the stock market altogether.
yeah.
And so we have to be careful with that. I encourage everyone to find a trusted financial advisor, of course, but I do appreciate that interest. I do think it's wonderful that investing is just like riding a bike. You
Yep.
have to get on the bike in order to do it.
Right, and
But
then you might need some help with somebody,
but
and
yeah,
that's where JB Bryan
that's
comes
right.
in, and always get great advice. Thank you so much for joining us
Thank
again this
you.
morning.
Thank you for the
JB offers
opportunity.
free weekly money seminars and webinars every Wednesday evening and Sunday morning. You'll find a link for more information at WTVR.com/VTM. Stay tuned. We'll tell you about the Children's Museum of Richmond's tuition raffle. Oh yeah, that's coming up in less than 3 minutes.